Hello friends, once again I welcome you back to the channel. So we are going to proceed with our institutional trading series, and then we are proceeding with order blocks. So we are going to be talking about range created order blocks and pivot created order blocks. So when I talk about that, it is the same as range created supply and demand, or range created or pivot created supply and demand. So basically order blocks, supply and demand, support and resistance, these are the same terms because they call for the same action as the market reaches in certain areas. You get? So we've talked about the ranges in this series. We talked about the ranges. We talked about the impulse moves. You get? And then we've talked about the order blocks. I encourage you watch the previous video. It's really helpful. I thank those that have watched and those that have appreciated. Yes, that's it. So that's it. Then let me quickly start here. We are on H4 Euro USD, but don't forget we are also going to go on synthetic indices. And today we are going to use two examples: volatility 75 and step index. So basically, why am I doing this? The chart should make a lot of sense to you as you come to it. You get? It should make a lot of sense to you as you come to it. Basically, you need to be understanding what's really going on. You get what's really going on. So one thing that I shared, we are going. Let's start with the pivot created order blocks. You get? Now there is something. Let me quickly illustrate it here. Pivot created as the market moves. You get? As the market moves, and then it's moving like that. You get? It's moving like that, and then it moves like that, and then it goes up like that. It comes. Get? So this is some kind of market structure that we are seeing over there. You get? So where is the pivot? Actually, let me show you like that. Pivot created, pivot created. Now, there is that zone where the market is rotating. You get? Where the market is rotating. So basically, we can see that we have a break of structure here. You get? So we are going to be looking at this area. Besides, I told you, as the market moves, if at all we are intending to change the pattern, or if at all we are intending to get a retracement, we know the market sometimes it's making a reversal, a retracement, and all that. You get? So as the market comes back here, I told you one of the things that we are going to be using to find out, we are going to use this tool here. I told you this smart money, they are interested in buying at discount, they sell at premium, and they like selling high to take profit down. You get? That's what they do. You get? So basically, in this area, we are going to be looking for an order block here. You get? In this pivot here. This one is going to be creating a pivot. So as the market comes to tap into this area, for us, we shall be placing our pending orders here, and then they come and get picked up. You get? They come and get picked up. Now, in the next video, I think I'll be explaining something about passive and aggressive traders. You get? I'll be explaining that. Now, we can see that we have a shift in structure here. So basically, the market came from this point, it came down, it went up, it came down, it went up, and then it came down, and then we got a break of structure there. You get? So basically, we got a break of structure here. You get? So now, what do we do? What do we do? We measure this distance here. You get? One of the things that we do, we measure. It doesn't always work, but most of the time it will work. You get? Because I showed you the example on gold where it didn't work. But then there are a lot of things that we look out for, fair value gaps and all that. You get? So basically, we are on edge for by the and you have to refine these things. So if you want to get a glimpse of refining, you go in my previous video. So we know the orders have to be picked up here. You get? And then the market goes up. You get? Because we've gotten the bias that the market is intending to go up. You get? So now what do? We look at this pivot here. So which means one of the things I told you, if at all the market moved here and then we rejected, sharply here, you get? One of the things that I can look out for is this large rejection here. You get? This large rejection here that you're seeing just over there. You get? And that's the H4 area. You get? So right now, I think you can see. And then the next thing that I'm going to do, before I remove this tool here, you get, we have the rejection is big, you get, but then I have to reduce this part to where the discount is, where blue starts, this blue part where it starts, this blue part, you get, because we know orders have to be picked up at a discount if really these people want to buy, you get. Now we refine, so which means this part of the wick is useless for now, you get. So I can now remove this measuring tool, you get. So which means on h4, I place my order in this area here, you get. So which means I can go on h1, you get. I'm not going to do an order flow for this, you get. I'm not going to go on small time frames for this, just to try to make this video short. But then here I place my orders and then they come and get picked up by limits. The market comes, it picks them up, and then we move. You get, we move. Because most of the time, as the market, as these moves are happening, they can happen most of the time. Let's say during the New York session. Now the market is there moving fast. You don't know what to do, but at least I've showed you what to do. You get, and then those are the pivot created supply or order blocks. You get. Now these ranges, there are moments when they give us a pivot, but then let me show you a pivot created order block on in synthetic indices. Let me quickly go there, and then for this we are going to use volatility 75, you get. We are using VIX 75. We on the daily time frame, you get. We on the daily time frame. So basically the same thing happened, you get. The same thing happened. We can see that the market moved lower here, it moved high, it moved we created a lower low, we created a lower high, and we moved like that. And then we can see that we broke structure, the structure just over there, you get. We broke structure there. So now we apply the same principle. Now we are looking at this area, how is it going to act as our pivot, you get. How is it going to act as our pivot? Now I bring the measure tool, you get. By the way, you guys, you do a lot of practice, you look for a lot of knowledge. For me, when I was learning, things were hard, they were not giving me a lot of time. So now we can see there's something really funny now here, you get. We can see that here the candle wick is in premium, but for us we want to buy at a discount so that we can take profit in a premium, you get, in a premium. Now what do we do? What we do is this, you get. What we do is this. Now um, um we are looking for prices in at a discount, you get. We look at prices in at a discount. Now here there are a lot of things that we can consider. We can consider the body of this candle, but then we have this rejection here, you get. Here this is also another point in a discount where prices got rejected. Now for me, I like buying in areas where prices had ever rejected, because those are hot zones, people are fearing them, and it's where institutions are turning, you get. So basically for me, what do? I can highlight, I can just highlight this area here, you get. No, this is not what I wanted. What I wanted is here, you get. I highlight off this rejection here, you get. So not always there will be a rejection, but sometimes we look at the last bullish candle. If at all it was a bullish candle that was really clear, but I will show that in later videos. Yeah. So basically we've highlighted it off, so I can delete. I'm good to delete this, you get. So which means on h4, this is the area where we should be looking to buy, you get, to buy. Now we can go, let me no, this is the daily. We can go on h4. Let's try to go to h4, and then we try to refine this area here, you get. So these things should be making a lot of sense to you people. They should be making a lot of sense. So basically this is the area, you get. This is the area. Now we look, you get, this bullish run as it was happening. This is how I'm going to refine now, you get. Because we started here, but now we come here, you get. We come there. Now we are going to refine it further. Let me change the color here to blue, you get, to blue. So now I'm going to highlight the wicks of the candle, you get, the wicks of these candles now, which means h4 is helping me to refine further, you get, to refine further, you get. So for me, I can place my penning order there, You get, this is the rejection where the prices were buying and then they go rejected, and then just like that, you get. So which means on h4 we are getting that rejection. It's, this is the area where we're expecting a reversal, so we should be placing orders here. So basically, even when you go on h1, we are going to find that the market reversed here and then it went up, you get, and then it went up. So basically, I've tried to show you how we can refine and how we find these pivot created order blocks. So which means, where is the order block? This is the order block that we were returning to. An order block, by the, it is just a zone, you get. It is an area, it is a zone, you get. It is a zone, but it is that area that you should be analyzing for you to get to know where you're going to get in, and that's how we refine, you get. That's how we refine. It is not, mostly it's not an exact point, but then this is the area where we need to be looking for the entries, and then I've showed you we can look for these candle wicks and then we get in. I believe you've gotten that. You get, you've gotten that. Now, let's go back to our Euro USD. Now, we are going to look for range created order blocks. You get, we are going to look for range created order blocks. Now, for me, the funny thing, now I'm doing most of my analysis on TradingView, because I'm not doing candle bar replay. I'm not replaying these candles so that I can first go through the things. But then most of the time I come on real chats, and those that watch my videos right away, they even go and watch the things that they do happen, because we even have targets that we hit. You get. So basically, we got an area here. This is an area of demand. You get. Basically, this is an area of demand. It's an area where the market is buying. It's little wonder that, which means as the market comes in this region, be skeptical for you to sell. Sorry. You get? As the market is coming back to this region, given that this was an area of demand, actually, this is where the order block was. You get? An order block, by the way, let me quickly explain to you. These institutions, they use pending orders. You get? They come and place their, they move the market up. You get? But then they place their pending orders here. You get? They come and grab them quickly, and then they move the market moves so sharply because there is a heavy order load that is here. You get? The market may go up and it shoots down. Here they're defending their orders. They keep moving the market up. They keep spiking the market up. You get? So which means as we return in this area here, this is a demand zone unless otherwise. You get? Unless otherwise. Now, for why we came here and we bought again, maybe I'll be showing that in the next episode, but I'll be doing a disservice to my students who are paid for these things. You get? So this is an area of demand. You get? But at one point it will be taken out. But then what do I want to illustrate is that I want to illustrate pivot created, range created pivot points or order blocks. You get? So basically, we are going to look at these ranges. Let's say the market going sideways. You get? The market going sideways, and then it creates a pivot. You get? How is it creating a pivot? Basically, the market, let's say, rotating around, let's say like that, and then it moves like that. So basically, we can see that we are out of a range. The market moves down, it moves up like that, and then we do something like that. You get? So that's the range created pivot point. So which means we want to be. Let me first put back this line. So what do we want? We want to be placing our orders here. You get, want to be placing our orders here. So as we get out of the consolidation, we don't want to be faked out here, like the same thing that happened here. You get, the market faked out here and then it moved. You get, so what I want us is this point actually. Now let me quickly show you what I want, because some of the things we missed them out. You get, here this was a target to hit, but then after hitting the target, what happens next? First off, you have to first study the market. So what do I want? Let me even highlight. I want us to be part of this move, of this reversal here. How would we get the entry confirmations in this area here? So this is the move that we want to be part of as the market moved. So we were getting out of the range, the market shot down, it moves up, you get, and then it comes back here. So this is a range created pivot point. So we get skeptical as the market is moving here so sharply. For us, we get in here and then we move the market with the market up. You get, we move with the market up. So that's what I want to bring out. And now it's something that we are going to illustrate. You get, so there is a lot for me that comes to my mind as I see certain candles running through each other. You get, so we can see that we have on H4 we have this bearish candle, but it hit both sides. You get, it hit up and it hit down. So what I was trying to bring out to you is that this candle runs into all of them. You get, but then let me go on H4 so we can see that. Let me just leave that out. You get, let me just leave that out, and then uh let's go on. Given that we're on H4, let's go to the H1. You get, the H1. So what do we see on H1? So basically we can see that this is the candle we moved up. You get, the market moved up, it moved down. You get, and then it moved up. You get, it moved up to create to break a structure there. You get, to break a structure there. That's what I'm interested in. And then we've seen that on H4, this line here, it was at a demand area. So what happens when we are in at a level of demand is that we buy. You get, we buy. Not always, but when we get confirmations, we buy. You get. So basically, as we shut down, we had to get a confirmation that really the market intends to go up. So we've broken structure there. You get, we get a break of market structure there. And now what is our interest? Our interest we apply if at all these people really want to go up. You get, they will buy, they will buy at a discount. You get, they will buy at a discount. So we put our measure tool, so which means we are going to be looking for entries that are below, that are in blue. You get, we divide the market into two, so we buy at a discount. You get, so we are not looking for entries up, we are looking for entries down. You get, we're looking for entries down. Now what's really funny about what is down, if at all, now we look, there is this candle here is the one that finally broke this structure, and then it broke with an impulse move. It is one large candle that is going up, but then it has a rejection at the bottom. You get, now for me, I like entering where the market rejected. You get, where the market rejected, but cautiously. So I highlight off that area. What am I going to do? Let me now delete this measure tool, because we know that we are now in a discount. You get, we are in a discount. So this is the area. Now that is the area where we are going to be placing our pending orders. You get, our pending orders. We are on H1. Remember, we are on H1. Now on H1, I go on M15. You get, I go on M15. And now what am I saying on M15? Now on H1, I would place my order here. You get, I would place my order here, and then my take profit, my stop loss. Some that, by the way, what you need to know is to know where you're going to put your stop loss. Now if at all these people went below this candle, personally it depends on your account size. You get, if they really went below here, you get, then it will be something different. You get, so basically this is the range where at least your account should be able to hold a loss up to, let's say, a drawdown of up to this point here. You get, so not always they can even proceed to this point. You get, but at least this is the area where for us we are buying. This is the zone where we are buying. So basically for me, I place my entry here. They try to go into negatives here to fake out people that the market actually, even besides, let me quickly show you something here. You get, the market, let me delete this line. You get, there is, if you don't do proper analysis, the market will always lie to you. Now there is something that they lie to people here. You get, they moved the market and they broke structure here. You get, they went below this low. You get, basically you can see this candle went below here. Now for some people here would be buying, they think we are going to continue to this downward trend. No, you get, for us we know this is a zone for buying, so we buy here and then we move with the market. You get, we move with the market. So I've tried to show that maybe we can also use step index, but step index, I don't want to make this video long. But anyway, generally I talked about step index yesterday. First of all, step index on the daily. We know we were breaking structures as we're coming down. You get, was breaking structures as we're coming down. So basically, that's for sure. We know the market is really coming down. At least we've gotten the bias. You get, we've gotten the bias. What was the next thing that we were looking at? Let me delete this. Let me delete this. What is the next thing that we're looking at? Given that now we know that the market is coming down, you get, it provides us with, we look for opportunities to join on the trend. You get, I told you I can look at this large rejection here and then I just highlight it off. You get, I just highlight it off like that. You get, so what do I do next? I go on H4. You get, I go on H4. Given that we're on the daily, we are looking for the order flow, the best point, because we know the market has to be uh, uh, it has to be moving as it makes those pullbacks. You get, so I want to look for the area where it's going to retrace. You get, where it's really going to retrace. So anyways, step index, the chart is not loading. Maybe that will be for another video. You get, it will be for another video. Besides, I explained that in the previous video. You just watch it. You get, let me not make this video long. But these are the things that I'm capable of, that I like most. You get, though if you want indicators, I can still do them. But in this series, we are doing price action. So I think those that are watching, I think those that are appreciating, there's more to come. There's more to come. But if you want proper detailed analysis and instruction, you can join my mentorship program. You get, for those that wanted the demo of my mentorship, this is the demo. You get, because here I'm showing you what I do. You get, where I go in detail. So for now, wish you the best and peace.